here.
Folks, you better get ready because we've got a lot to get into today. For starters, we're going to break down the latest on the market and plays, and then we're going to go on to one specific stock that I believe will set early buyers up for massive gains into the end of the year. This stock actually has the quadfecta of growth. Yes, that's a word. It has an accelerating business model, long-term staying power, extreme proof of concept, and a large competitive moat. Very beautiful setup here. I'm going to present the case and let you be the judge. Remember, as always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Also, by popular demand, we've decided to extend our Labor Day 25% off sale on our Discord to midnight tonight. So make sure to take advantage of that if you haven't already. This is the final, very last call, so make sure to take advantage. Okay, so we got to start with APLD Applied Digital. So we screamed that APLD was a buy, a beautiful buy at $4.53 and made a huge public video about it. And this morning it hit $19.74 at highs. Very nice. We love rallitos here at Zip Trader. Anyways, this morning I sent out this Discord alert saying, quote, APLD continuing to see beautiful momentum. That said, be aware pushbacks at these levels tend to come with the territory. Congratulations for folks who have been playing this since our original callouts in April. And if you look at the chart, I said looking for breather, then new high. Why? Because you can't have a sustainable, beautiful momentum cycle without a pushback. Imagine if you're watching a track meet and you have all these runners and you have one runner that's doing great, but you're like, you know what? You can't breathe. What happens if you don't let that runner breathe? Well, the runner is not going to be running for much longer. Let's just say that. And it's the same thing when it comes to the stock market. We as market participants need to be aware that markets, they operate in cycles of being underhyped and overhyped, both on a short-term time frame, but also on a larger, longer-term time frame. So if you can utilize these selling cycles to get better entry prices, well, that's a great advantage. That said, the long-term for this play is very solid in my opinion.
Analogy.
As we said in the last video, APLD is investing huge in infrastructure to service the massive AI computational demand, and it's turning those large upfront investments into durable recurring cash flows. This company's got massive long-term locked-in leases. It's leveraging the AI supercycle. It's got a REIT-style business model, basically a AI landlord. It's got an anchor tenant that's backed by NVIDIA, and NVIDIA itself has actually a direct stake in this company. And so when you're looking at the bigger picture of the stock from both a fundamental standpoint, the actual business, and from a technical standpoint, the chart, I think there's a lot of elevating factors pointing to a lot more upside over the long run. Okay, next we gotta talk about Tesla. So Tesla is pumping massively on a trajectory to all-time highs. Now there's a few reasons for this. For starters, Elon Musk is largely out of the political spotlight right now. Elon Musk just bought $1 billion worth of shares, and it just came out today. Elon Musk affirmed his focus to the board. Elon Musk is likely going to have a massive pay package incentive, somewhere around $1 trillion. And bigger picture outside of Elon Musk, while markets are finally accepting that Tesla is an AI company. Thus, they no longer care about consumer trends and EV demand because they're actually more willing to see the bigger picture here. I know I'm preaching to the choir here, but if you value Tesla as a car company, well, the valuation is ridiculous. But if you value it as an AI company with an automation component that has to do with not just cars, but robotics, and a million other applications, well, then all of a sudden the math looks very, very different. Now, for context, if you go back to our March 2025 top 4 stocks to buy video, we came out very, very hard and very, very fast for buying Tesla during its dump cycle. Keep in mind that this was when Tesla's numbers were looking bad. Every media article on Tesla was bad. Elon Musk wasn't really focused on the company because he was too busy at the White House. This is when people were vandalizing Teslas and when Elon Musk was at the height of his negativity pushback. And then we actually went and reiterated it throughout its recovery cycle, even when Musk decided to have his dramatic breakup with Trump. But nonetheless, my argument was that once Elon Musk was back at the company, you'd see the stock price accelerate massively. And Tesla stock has now almost doubled since we made that argument back in March. You have to understand, people with the big money that move these types of stocks are looking to grow their money, not make friends, not get good articles about them, but they're actually looking to grow their money. If you're looking to grow your money, you can't be trying to please everybody. You have to be investing in winners. And whether you like Elon Musk or not, he knows how to long-term come out a winner, and that's what a lot of these big money types are betting on. Now, I can appreciate that some folks watching this video may love Elon Musk and others maybe not so much. But you gotta understand, all of the richest tech billionaires, they are literally all super controversial and all hated by the media in many different ways. The only way that they're not hated by the media is if they donate to favorable political parties. And even then, the other side of the media will hate on them. So there's nothing really you could do to not be controversial and be super duper successful and effective in today's society. It's just not the case. But the case that I would make for Tesla is long-term, the execution and the vision are there. And for folks who bought the dip, well, we're seeing massive validation. Okay, next let's talk about SoFi. So back in August 2022, we screamed buy SoFi at about $6.50 because they had a ton of tailwinds coming, and we actually amped up the highlighting of the SoFi after Trump got elected because of deregulation and ending of student loan freezes and so on and so forth. And with today's pricing reaching new cycle highs at just 20.
Okay, let's jump into a little breakdown of a stock called Applied Electronics. It's actually Applied Optoelectronics. If you are joining on X, head over to YouTube. If you're on YouTube, good morning. And I think this is the top watch for today. It's definitely connected to some big companies. The chart looks incredible. And it's not the only stock that looks incredible. There are a couple others, which I will speak to. But right now, this one is at a pretty important level of $30, okay? The title of this live refers to plug. We're going to get there though. Right now we're talking about Applied Optoelectronics, and let's get into what the heck it is they do and why now is the time to buy it. Okay? So, not an NVIDIA stock. It's sort of like the picks and shovels for NVIDIA, if you can believe it. But it is an infrastructure stock, and it does have some peers in this space that are relevant. There's definitely some key differences between those peers, but we want to make sure we buy the best one. And I think you got to say it is AAI, Applied Optoelectronics, right now. Okay. Let's jump into a little breakdown. There's one stock that is about to skyrocket, in my opinion. I'll give you the ticker right now. It's AAOI, Applied Optoelectronics. It's the AI infrastructure play. Optoelectronics are lasers and laser-like sensors, which are in the chips that make up data centers. So it's the picks and shovels for NVIDIA, which we typically call the picks and shovels. So let's get into what this stock looks like on the chart, and then we can get into what it is they can be compared with in terms of peers. This is why the chart looks so good. If you knew nothing about what I just told you about what this company does, which many great investors don't know what companies do, there's been a ton of volume starting in mid of 2 years ago, okay? And the stock has just sort of worked its way up. Obviously some euphoria late last year. And then with the tariff down move, AAOI also had a down move. This is a monthly chart. So this is actually 3-4 months, 5 months there. It's a while. But now when we zoom in, we can see that they worked their way back up and they're at this important whole $30 level, which actually goes all the way back to November of last year. Okay. So talk about what they do. We'll talk about their peers. We are going to make sure we're talking about how to invest. So I do want to say that there is no other holders of the stock prior to November of last year. So these are all of the bag holders we have to reckon with. And when we talk about bag holders, we mean people who own it up here, who, when the stock gets back up there, they could sell because they're suddenly break even on your possession. You could understand that. If you're underwater, you're looking at your portfolio and suddenly you are back to break even after months. Well, sometimes you sell. But if you can get above this 45 level, a ton of blue skies, and right now it's this $30 level, so you can get tight risk reward for that buy. So that should satisfy the quant types, the technical types. A lot of the young investors are very technical because, I don't know, they have better eyesight or less knowledge of what's going on. But whatever it is a way to invest, and it is pretty effective despite people not liking it as much. So let's get into some actual information and less commentary and judgment and look at these peers, okay? CRDO, COHR, and LITE are the main peers in, you could say, optical connections for data centers, okay? Networking, you could say. So COHR, it is at an interesting level. It does have some strength. Earnings results definitely at a negative reaction, but it's boding okay for the sector. Light has done great, so that's a great note of confidence for the sector. I wouldn't want to buy it now. It's 100% above from the 200-day moving average. 200-day moving average is a moving average a lot of companies use. A lot of hedge fund companies, that is. Traders, professional traders, and retail traders, who I guess we are professional. CRDO also doing excellent as well, okay? And this was the TerraFlow. This is 270%, okay? So I think there is some meat on the bone on the one that hasn't gone yet that's also at a very important level. And if we want to get a little bit more granular as to what this company does, well, I'll tell you what these guys do, okay? Lasers, optical products, networking, okay? And interconnections, okay? Are they different? Yes. Does it matter how different they are for our purposes? No. Now let's look into what the one we actually want to buy right now based on the chart does. Okay, there are some risk first. If you look at the most recent revenue right here for AAOI, it did have a negative earnings per share, but the reaction was good. So we don't pretend to be financial analysts here. We look at what people are actually doing, which shows us what they want out of the stock. Beat their expectations, you could say, even though it's a negative earnings per share. They do have some plans for expansion. About $80 million new facility. They're hiring, okay? Very soon. That's a good sign. We don't have to over analyze exactly what's going on here. But they're certainly in the right theme, okay? These are all of the right buzzwords, okay? We love these buzzwords. Not just analytics, real-time analytics, okay? And these are in the broadband space, of course. Of course, when we think of that, we think of semi-stocks like Broadcom, okay? Which has done incredible as well. So once again, I do think this is the one that hasn't gone yet. And that's what we try to do here. There's not as much talk about the stocks that haven't gone yet, right? But that's really what we need to be focusing on to do well. And that loss was negative, but it had narrowed relative to prior year, okay? And I can explain that in other words the way chat did as well, okay? But yeah, I do think that earnings reaction was strong. And we don't have to worry about, we know they have over $100 million of revenue. This is a big company. Well, as far as companies that are sort of unknown are. Now, other risks we could look out for, although we're likely to see this in the chart before we hear them in news, okay? That's not too scary because we know what they do. They essentially serve data center customers, and there's only so many huge purchasers of data center components and purchasers of data centers. It's the big dogs, right? It's Meta, it's Oracle, and we don't really have to worry about those unless the chart moves or we see some type of news that is negative while the market still goes up and this company goes sideways. Okay, so that would be called relative weakness to the market. And if we hear something like Microsoft choosing a different provider for their basically optoelectronic components, sensors, then they could lose half the revenue. Okay, that's a big deal. That's a big deal. That is from the 10K. So other than that, there aren't huge customers that we have to worry about too much. And as far as, again, what they do, you can think of them as like the Cisco, which had a massive run in the early 2000s and late 90s, I believe, of today. Okay, so we want to get in while they are on the upswing. They do have an agreement with Amazon, which is also notable, just to give them more legitimacy. Amazon basically has an option on buying shares at a price which is below the current price. And that's a big number, okay? Amazon can buy $4 billion in stock. That's really all that needs to be talked about, okay? We could go into details for hours on this company. You're not here for that. I'm not here for that. We have too many companies to choose from. I do think Applied Electronics is near the top of that list. And this chart looks amazing. Rory and Katie said, I like the stock. We can say, I like the chart. Okay? So, if you like this type of sort of quick analysis, which does go into the details, but also buy stocks that we think are going to go up without getting lost in the weeds, head over to stockscommunity.com. You can join for $25 for 7 days. Give it a shot. If you like these videos, imagine what it's like to get to chat with me, and then also with a community of people as the community grows. So I will see you in the next one. Hit that subscribe button if you haven't yet.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's jump into Zip Trader again. See what Charlie's up to over here.
$8, you might be thinking, Charlie, no way can this go up more. But if you're thinking that way, you're missing the bigger picture here. I was never looking at SoFi as a stock that's just going to recover to its all-time highs. I was looking at SoFi as a stock that has way farther to go above said all-time highs. My thesis for SoFi is very simple. Look at the member growth. Quarter over quarter. Look at how they're able to monetize said members quarter after quarter, and ask yourself what the trajectory of that looks like. Way more members and way more ability to make money from those members. So with this one, I'd say don't be surprised to see this crush all-time highs at that $28.26 level and then continue to build momentum into the 30s. Okay, next, let's talk about TEM. So TEM is a stock we've been covering on this channel for a while, and I actually got this idea originally from famous money manager and part-time politician Nancy Pelosi. At the beginning of this year, we presented that she bought 50 call options on TEM, and upon doing my own research into the stock, I explained, look, this is a very strategic bet for her, and I believe in it a lot. TEM has gone up a lot this year. It's performed very well, but there's reasons to believe that it's going to go up more. And let me break them down for you. So for starters, explosive revenue growth. Tempest is scaling fast with nearly 90% year-over-year revenue growth. I think it's 89.6%. Its data-driven healthcare platform is gaining traction across pharma, biotech, and clinical partners, showing strong demand across multiple verticals, which is beautiful. FDA and product approvals. The recent 510K FDA clearances for Tempest Pixel AI-powered cardiac imaging adds legitimacy new clinical use cases. For some reason, whenever I see politicians that are buying stocks that happen to be in the FDA approval process, well, it seems to me that oftentimes they end up having a favorable ruling. And each regulatory green light for this company is going to expand the total addressable market and strengthen its moat as a leader in AI-driven diagnostics. There's also pharma and clinical partnerships that are expanding pretty massively. Tempest continues to ink deals with top pharma companies and research institutions. These partnerships not only drive recurring revenue for the company, but also expand their proprietary data sets, making them a bigger and better and more powerful AI play too. AI in healthcare is also a very powerful tailwind. AI adoption in precision medicine and drug discovery is quite frankly accelerating dramatically right now. Tempest is one of the few scaled players with real clinical data sets and FDA-cleared tools, position it as a go-to infrastructure provider for the AI healthcare boom. And there's also a lot of institutional buy-in and momentum there. Institutional investors continue to build beautiful exposure, signaling confidence in the long-term story here. Now, on the technical side, shares have broken out of consolidation regions and are pressing towards newer and higher highs, giving the stock some very beautiful, strong momentum into year-end. So anyways, Tim, very excited about what we're seeing. Congratulations if you played this one successfully so far. But we continue to see long-term broad upside into the end of the year, and we just alerted a new round of calls in the Discord for TEM. So if you aren't a member yet, or you are a member, go ahead and check that out. You can join with the link down below. Okay, main entree today, RGTI Rigetti Computing. This is a California-based quantum play. Now, again, I got to go to the context here so people know where I'm coming from. So the context here is back in April, we came out for this stock when it was in a panic cycle that brought it all the way down to $8.57. And yes, now it's gone back to $19, and congrats to folks who believed in this. But quantum is so early innings that these numbers are likely going to be minuscule when you're looking at the stock in, say, 3, 4, 5 years. Maybe even when you're looking at the stock in 6 months. Quantum computing, folks, is expected to see quite the scale up heading into the next decade. And so companies that are building now, building today, are likely to see massive investment because in the future, it's going to be a core driver of high performance computing that is necessary for AI. But again, we're still in the early innings here. So that means what? Well, it means you have a big opportunity. Now I want to back up for a second. So there's this famous quote from the late, great Peter Lynch that said the following, quote, "Know what you own and know why you own it." And when it comes to many stocks, especially in spaces like general AI or quantum, it can seem hard to really know what and why you're buying something. That's no excuse to completely avoid it because a lot of these have huge opportunity. So here are 5 very clear-cut reasons to consider RGTI stock. Number 1, market tailwinds. Quantum is expected to drive $450 to $850 billion of economic value by 2040, creating a $90 to $170 billion industry for hardware software providers. Rigetti is one of only a handful of credible players positioned to capture this wave. Number 2, technology leadership. Rigetti is proving real progress. Its new Cepheus 1 system doubled error reduction and hit 99.5% fidelity with a clear roadmap to 100, 300, and 1,000 plus qubit machines. Number 3, manufacturing moat. Very, very important. They're Fab 1. So Rigetti owns the world's first dedicated quantum foundry, letting it innovate way faster, protect IP, and bypass supply chain risks. This is a unique barrier to entry competitors can't easily replicate. 4, they've got tier 1 customers and partners. They're trusted by NASA, the DoD, UK National Quantum Center, HSBC, Moody's, plus deep partnerships. They've got deep partnerships with DARPA, AWS, Microsoft, and Quanta Computer. These validate credibility and accelerate adoption. And then they've also got very strong financial backing. Rigetti has one of the strongest balance sheets amongst quantum startups, giving it runway to execute its roadmap. So what about the chart now? The stock has been building a beautiful uptrending channel all year, benefiting from massive amounts of investment into computational power, and we are heading for a breakout of highs and into the 20s. But the beauty of a channel is you can also scout out clear deals. The chart suggests that a deal zone for the stock is around $16. Now, back in June, we alerted $12 strike calls on RGTI, which are expiring in a few days. Shout out if you played these. And our next round of RGTI calls are going to come out in the Discord tomorrow morning. So if you'd like to join us there to see those calls and to see all of our ideas and get the full Zip Trader experience, well, I'll put the link to join Discord with that 25% off coupon code that expires tonight down below. We'd love to have you on the team. Anyways, that caps off today's video. Have a great rest of your day, and we'll see you next time.
All right. that's probably enough of that. We'll do a little of a training here, okay?
Really trading intraday. And I could do that, and that's what I'm left with. And it's
Here we go.
definitely way simpler. So I know I said I was going to get into brokers. I got kind of caught up in the indicators, but you can see the green one is the 200-day moving average. That's right here. A moving average is a average of the price, and it moves over time. So if the stock traded at 250 and then 300 and then 350 in 3 days, the average would be 300. So that's where the stock would be at 300. This moving average is over 200 days, so that's why it's so slow to go up after the stock has gone up. And you use that because funds buy off of that. You can see the stock reacts to the moving average. See right here, actually went sideways for a bit. Here, when it broke the moving average, it had a pretty rough price movement down. So it is important to look at them. This is the 50-day, and this is the 20-day, and this is the 10-day, and I colored them such that I can tell the difference between them. Although I probably should color this one a little differently than this one because I really do get them confused, but whatever. It's good to have a little bit of, room for improvement in your existing design. All right, so those are the moving averages that I use. And then the ADR is the average daily range. Yeah, we're just going to do all the indicators now instead of coming back to this. We'll go to the broker in a second. ADR is average daily range, and it's what it sounds like. It's the average range that the stock changes in a day. So if it goes from 430 to 480, and then hangs up from 470 to 490 or whatever this tiny candle is, I can't see it right now. I'm going to put all these back so I don't forget to put them back because I am trying to learn slightly more indicators. But you don't need them. This is like the 5% out of the 95%. That's really important. The 5% is like the little cherry on top that I'm trying to add. So this little guy, minimal range. This is maybe like 1%. This move is maybe like 3% of Tesla's stock price. I can't do the math right now, but it's $400 stock, right? So I can do the math actually. If $40 is 10% of that, right? So if it goes from 440 to 470, that's like a 7% move, and we can actually see that here with this little indicator. I've got a drawing. Is the drawing tools section. I actually do use this text one as well to put my entries here. So I'll say, plus share if I bought a share here, and it shows up like that because I have it configured in the workspace to have it be a green tiny triangle. Text arrow is on, and it's at the bottom, and I put a price, and I put +1, and then I put the time and the date. You don't have to do that. Most people, I would say, probably do not put their executions on their charting software. They probably just kind of remember where they bought it, or they look at their broker. And so that's pretty much all the indicators. The average daily range, where do you see this? Well, this is in, I don't even know what this is. I think this is in studies. No, we were just in studies. This is in style. Boy. No.
Okay, that's a little taste. Let's jump into a little bit of Invest with Corey. Okay. We've got a little bit of a fast internet speed here. We're going to be talking about an NVIDIA-backed penny stock. I don't know exactly.
There are three massive trends creating a
Loading on this one, so we're gonna
once-in-a-decade
jump into
opportunity
Felix.
right now. That's what Winston just told me. You just had to
There we
lie
go.
down on the news. And what have we got? We've got gold breaking records because governments are printing money and central banks are buying gold. Healthcare equipment is booming as baby boomers now age and need healthcare equipment. And power companies are getting rich from the AI revolution. Data centers need massive electricity. So we're not talking about risky startups here. These are real companies making real money. Miss this triple opportunity and, well, you'll watch others get rich while you sit on the sidelines. So what are you going to learn today? I'm going to walk you.
All right. Gold. Now, let's talk about another stock here that I think is more important than these massive themes right now. Gold, healthcare, and data centers. I think there is one more underlooked category. So that's at a pretty favorable level. It's under $2. And I do think the Amazon connection is pretty notable for this company that we're about to jump into. And it's really hard to bet against Amazon. All right, here it goes. There's one stock under $2 that is about to explode, in my humble opinion. It is partnered with Amazon, and it is a sector that has been underlooked for 6 months or more. We're not talking about AI. We're not talking about healthcare, like United Healthcare, which was at an all-time low recently and then got bought by Warren Buffett. And we're not talking about any type of quantum or drone aviation euphoria either. The ticker is PLUG. Sorry for touching the microphone. It's Plug Power. And let's jump in right now to why this is a good spot to buy this company. This is a chart that is down, okay? That $2 level is very close, whole dollar level, going all the way back to September of last year. And there's a place to risk off of $1.50, basically, okay? But if we really zoom in, we can see that we can even risk off of just about a couple weeks ago, this level here, okay? 170, which is very favorable. And there's enough volume here, okay? Doesn't look like a lot of volume, but this candle is almost $80 million. It's actually a lot more than that. I don't do public math in videos. Let's look at what this company does so you can get even more idea of why I'm talking about it here. They do hydrogen fuel cell technology. And you might say, oh, like the Hindenburg, the blimp that didn't do so hot? No, we're talking about actual partnerships with big companies, including Amazon, to the tune of 17,000 Plug Power fuel cells in 80 fulfillment centers. And they have an agreement starting this year to add a ton of hydrogen annually, okay? And so you might be saying a ton is a pun, not intended, a lot. Why hydrogen, right? Well, it's not anything new about a product breakthrough or any type of government investment or strategic move preventing China. It's simply that it just makes sense. Think about people ordering packages 24/7, and you need a forklift essentially that can work and be low emissions, okay, and also be effective. They do have on-site renewable power at some locations, but also Plug helps with that, okay? And I think Amazon could use old-fashioned forklifts, okay? It might sound kind of frivolous to be talking about investing in a forklift company, but when you're thinking about the scale of Amazon and how important robotics is to their operations, every single product being sold through essentially a web page and then having to be fulfilled, the prospects of this company start to get pretty interesting, especially considering it's an under $2 stock. It's very inexpensive. And Amazon does have to be in regulators and the greater public's good graces. And this is a avenue to do that. The main issue here is, well, they do have concentration in this particular sector, but besides this concentration, the sort of negative brand of hydrogen, this company is actually making it happen, and they've already chosen this company, so they obviously know that they can fulfill. I don't think that humanoids are going to be in Amazon's warehouses doing exactly what this company does, essentially because of the size of a forklift. Okay, so I don't know about you, but I haven't heard of hydrogen-powered humanoids. I've seen human-type form factor robots, but essentially what we're talking about is you do still need not just a robot form factor that can carry products under 50 pounds. You need an actual carrier of large items and large groups of large items. So it's an under $2 stock. Below $2 stock, margins are still negative. Is that a surprise? They're burning cash. Is that a surprise? No. They are working with a investment bank that is traditionally tied to startups. Okay? Let's say it like it is. They are a startup. We're not pretending they're not. The fact that they're succeeding even in this current administration, despite being a sort of a company that would benefit from a more sort of EPA positive administration, is a major tailwind, considering anything could happen in 3 years. And I'm not suggesting you do hold this stock for 3 years. I'm saying even if you do look at the next few months, revenue is up, and they do have this sort of business unit, which just refers to their charging and units in these warehouses. This is just a word for their hydrogen forklifts, as far as I know, and as far as we need to know. I'm pretty sure that's all that is. That unit tripled year over year. Okay. And that's the unit that is representing the reason to invest in this company, which is the warehouse automation use case. They do have an international partnership, massive country and market, and they're getting renewed and expanded contracts. Okay. So we can look at the price. We don't really have to worry about the details of their competitors, although we want to make sure we see what FuelCell is doing, FCell, and what Bloom Energy is doing. They have had huge moves recently, but I do think Plug Power is the one to focus on right now in this sector. FCell has been beaten down a while. This is sort of, why buy a low price stock that hasn't shown much interest. Okay, there is increased volume here, but when you compare it to Bloom Energy, this has been insane. Okay, and this part of this move in Bloom was there was a big big partnership back here. And this is what we're talking about here. We've heard a lot of the euphoria around Oklo, small nuclear reactors, and Bloom Energy is in the same breath. Okay, these data centers need energy, and this company is helping with that. Now, I do think the closest analog, people are going to be looking at Bloom Energy, and when I say people, sometimes I mean algorithms that clump these all together. And so if you want to buy the next Bloom Energy or a Sympathy, you start to look at FCell, which has had a little volume, but again, the chart is not something that's that interesting if we didn't already know there was interest in the sector and connection to BE, which had a massive move. So for that reason, I think the only way to really go is Plug. And there has been some increased volume here. Volume sort of dries up. You actually sort of want volume to dry up when a stock goes sideways because you're getting in before the buying volume. So this isn't an easy stock to pick up on a scan. But here it is. It's below $2. I gave you some levels. We have some fundamental reasons in a partnership with Amazon. And renewed contract with Amazon and with its other customers. So we know this is a penny stock with low margins that's burning money. And we know all that, and we still have an opportunity to buy it. Okay? If you're not one to buy cash burning companies, well, you are cutting out a lot of opportunities that can have big moves up on euphoric type press releases, which Plug could have one, and it might not even need a euphoric type press release to have a move similar to Opendoor, which did some restructuring. And is Plug the next Opendoor in terms of movement of the stock price? No. Could it be? I don't know. I can't say it won't be. I do think there's blue skies to the upside. There's a tight risk reward position. It's a safe, consistent play, strong pick, in my humble opinion, at this time. If you want to chat about stocks in a community setting, think like a Discord or a similar type of not forum-based software, but also not a Facebook group, head over to stockscommunity.com. We can chat there for 7 days for $25. If you think it's worth it, if you think some of these videos have been timely, head over there, try that out. If you haven't hit that subscribe button yet, hit that subscribe button, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Let's take a look back at Felix here.
You through why gold is going to hit $4,000 plus, in my view, could go much higher, in fact, and which companies will benefit the most, and how aging baby boomers are driving and creating a healthcare equipment gold mine. So healthcare, that's what happens when people get older. Lots of money to be made there. And then we have the actual AI play, but it's not an AI play. It is the new power play. The power play is the shovel of the AI play. So I'm going to run you through that. Now, if you're wondering who the heck I am, I used to be an investment banker. Replace the B with the W and you get how most people perceive those, and that's completely accurate. I'm also the founder of the GOAT Academy. We've got over 20,000 students and we help them get to the path of financial freedom. We focus on facts and data, not hype. Now, why are these three sectors that I just highlighted so important? Let's start with gold right now. Central banks, so your Fed equivalent, are buying gold like there's no tomorrow. Over 1,000 tons per year. And then we have the healthcare stuff. Did you know that more than 10,000 Americans turn 65 per day? Yeah. You know what that means? They need more medical devices. And then we got the independent power play. Why? Because 12% of all power in the US, I'm always referring to the US here, is going to be used by AI within about a year or two. Government policies are backing all three sectors. So we got multiple trends hitting at the same time. So it's kind of like catching like, three waves at once if you're a surfer. So for those of us who are actually serious about investing, I have something even better than these stock tips for you. And there's going to be a workbook, there's going to be everything here. And that is, I'm going to give you Wall Street's own rules in your pocket. I'll gift those to you. That is literally my gift to you. And I'll do that at a live training. And you can sign up for that at felixfriends.org/training. The link's down below in the description. We'll try to pop it on the screen as well for you. And it's free. And in about an hour and a half or so, I will literally teach you the very rules that the guys on Wall Street use. That sound like a deal? That sounds like a deal. Put deal in the chat and I'll see you over there. Now let's dive a little deeper into the gold story and then into the actual tickers. By the way, I'm not trying to hold them back from you. There are obviously timestamps if you suffer from ADHD or something, and that's okay. You just miss the thread and the actual learning because people just come for like the gold tips. It's like if I give you a fish, it's going to go off in 3 days, right? If I teach you how to fish, it's going to change the story completely. So I just let this thing play. So we have the perfect gold setup right now. Why? Well, you have organizations like the Fed, they're lowering rates, right? What does that do? Well, what do lower rates do? Lower rates basically increase gold prices. That's actually how that works. So when rates go down, gold historically gains over 100% during the cycle. Over 100% during the cycle. Did I just say that? And gold is also the ultimate inflation protection. So if you think those guys are going to let a bit of inflation back in the house, well, gold is your place to go. And then we have China, as Donald says. We've got India. We've got Turkey. And they are all wanting to be less dependent on the US dollar. So they're not a huge fan of Uncle Sam. So therefore, they are no longer buying dollar instruments, which would have been government bonds, and they're putting that money instead into, you guessed it, into gold. 95% of central banks in the world plan to increase their gold reserves. So this isn't speculation. This is actually governments preparing for, more uncertainty and so on. Now, if you want to dive deeper into all of this, including the stocks, including the sectors I really understand, I've actually made a workbook for you. That's free too. And that's at felixfriends.org/3, I think, because we have 3 stocks here. That was sort of the way I remember that. The link is also down below. So download the workbook. In fact, I'll show it to you. Here it is in its full detail. It walks you through understanding the sectors. It walks you through company analysis frameworks, opportunity sizing, edge analysis, power analysis, stock analysis practice. These actual stocks, what we're looking at, gives you the numbers, gives you some exercises so you'll actually remember the stuff. And then we put it all together, we give the picture, and there's so much information on there. It's incredible how much value we give people here. So what's the first stock? The first stock is called ticker symbol SKE. I'll show you the stock chart as well. It's Skeena Resources. This is a gold mine. And if you're looking at charts like this and you're going, oh, it's gone up a lot, and that's really all you see, then you are like most people. And you probably have friends and a social life. But if you want to replace the friends and social life with more money, I'm kidding. You can keep the friends and the social life. In fact, people will love you even more because you'll throw better parties. They'll be like, that guy's always so generous. And they won't really know why. Because you actually understand what the chart's telling you here. And the chart here is telling me breakout. And that's exactly the sweet spot that we look for, increasing volume. I'm not going to walk you through the details of that because it'll make this video too long. But if you join the live training at felixfriends.org/training, then you are going to get gifted that entire knowledge pack right there and then. So what does Skeena do? Well, what I really like about these guys, they're developing a gold mine, probably one of the richest gold mines certainly in North America. And it's in the Golden Triangle. What's the Golden Triangle? It's sort of the Silicon Valley of gold mining. Does that make sense? It's in British Columbia. They have 3.3 million ounces of gold and 88 million ounces of silver. I mean, who doesn't want to own a slice of that, right? And as I say, it's not just any gold mine, it's a high-grade deposit. So it's incredibly profitable. So why are they about to explode? Because they've secured
Love British
funding.
Columbia. I want to go
They got
skiing there.
750 million in funding. And that helps them to build the mine. So the first gold production starts 2027. So it's early, right? Now, what is their cost per ounce? And this is, you won't believe this. What's the gold price right now? Gold per ounce. Goldprice.org should have that figured out. 3,680. Okay. So gold now is at $3,680 per ounce. What do you think their cost is for this mine? The cost for this mine is $687 per ounce. And I think we can all see what the difference is and what therefore the profit is. So they're going to make $3,000 per ounce getting gold out of the ground. Now, they expect to take 366,000 ounces out of the ground per year. 366,000 times 3,000 profit. That's more than $1 billion per year. So you can kind of see what people are excited about the stock, right? So all of their investments into this mine, they're going to make it back in 1 year. So this is a pretty freaking good investment if you ask me. Now, I'm not telling you to buy it. I might be wrong on it. Maybe they'll never, the mine won't happen, or they'll find a, I don't know, green-backed tortoise that's lived there for the last 18 months and is now an indigenous species or something like that. You never know, right? Canadians. But no, I mean, Canada has a stable government. It's very mining friendly. So this is good. And imagine if the gold price goes up even more, then this 3,000 could become even more than that. And that's why this is a cash machine, an absolute cash machine. Now, again, I'm still not telling you to buy it. I'm telling you do your own research. That's what I'm telling you, because you need to have confidence in your own research. Otherwise, you know what you're doing. Now, sector number 2, as I said, it's healthcare.
Stable is a good word for
Actually,
Canada,
not healthcare, because that's
for
kind of
sure.
complicated. It's healthcare equipment. Now, why do we like healthcare equipment? Well, as I said, 10,000 Americans turn 65 every single day. That is 3.6 million per year that turn 65. People over 65 spend 2 times on health care compared to younger people. And this isn't a trend you're going to stop. It's just pure demographics, right? So we are seeing, well, what are we seeing? We need more wheelchairs. So guys, go and do some exercise, right? We need more oxygen machines. Go and do some hiking. We need more glucose monitors, apparently. Stop eating all that sugar junk. Right? And we need more dental work. Floss, my friends. We have more chronic diseases. I'm not going to write this down. They're depressing. Diabetes, arthritis, all that stuff requires long-term equipment care. And AI is making these medical devices smarter and more profitable. So AI is creating more money here. So the medical equipment market is growing by about 50% over the next couple of years. So the stock we're looking at here is called Envista. The ticker symbol is NVST.
All right, enough AI talk. Let's get into an actual stock that I think has a great opportunity, good buy spot. SoundHound, SOUN, also known as Soon. Let's jump in and talk about levels, talk about the connection to Big Bear AI, and what else we want to do with the stock, because it's not like they have any crazy news, but I do think they are still worth looking at, considering just how incredible this chart looks. Charts don't lie. They just don't. So, see if I can zoom in a little as well so you can see when I talk about volume. Yeah, you can see that. All right. Very interesting. Did have recent earnings. We can take a look. If you are on YouTube, to go ahead and leave a comment. We can chat, say good morning. And then if you're on X, head over to YouTube and we can chat and say good morning. Right? Pretty good deal. So, let's get cooking here. Big collaboration with Samsung. That's notable. Solid, they had a year-over-year revenue increase, so nothing too crazy. The Perplexity connection is pretty interesting if that bears fruit. But we'll see. It's not as easy as just doing a collaboration with a voice company. But I think it is pretty useful. Unfortunately, they're not using Perplexity is not using them. They're using Perplexity. So it's a little backwards, but you know what? They're not a total startup, at least. They're not just sort of a wrapper. They do have this collaboration with Samsung. I think that's relatively new, somewhat more interesting than the Perplexity collaboration. It might seem like, why? Well, you can't invest in publicly traded LLMs. So this is pretty much the vehicle to do that right now. And it's a little crazy, but it is what it is. This could become sort of like the Chewy, or I don't want to quite give it any connection to an AMC or anything crazy like that. But I want to be a little bit measured in how we talk about this company's AI capabilities, because they are what they are. Samsung is definitely a big company, though. And actually, we can't really say Samsung is doing better than Apple, of course. They're not even listed on the US stock exchange. But they're still relevant. they are totally dormant, and they do supply Apple. They basically partner with all the big companies. So, okay, let's jump into that partnership right now and do a little breakdown. Okay? Think this is one of the best options today. SOUN, SoundHound AI. They are an AI company. Okay? They really are. A lot of companies use AI in their name. This one is really made it much further along. They are a publicly traded ticker. Okay, that's a big deal. It really is. So, well, let's go. Let's get going on this breakdown right now. There's quite a lot of info, and all these connections are notable. There's one AI company that is about to break out, in my opinion. It does have a collaboration with Samsung, and if Samsung doesn't make your eyes light up, well, keep in mind Samsung does provide components to Apple. They are partnered with Meta. They are partnered with Tesla. They're partnered with a number of big companies that you probably think are more powerful than Samsung, and you'd be right to think that. However, we're talking about SOUN, SoundHound AI. This is one of the only ways to invest in a publicly traded vehicle that does voice AI. And if ChatGPT's 400 billion valuation and increasing value is enticing, there's no other way to get into LLM type investments publicly rather than through SoundHound. So let's jump into the chart. Let's jump into why there's a lot of buying activity, and let's jump into why there is some long-term prospects for this company that isn't as public-facing as the ChatGPT we know and love. So here it is. This is the chart. I always, to this point, start with the chart because if you knew nothing about what this company does, you'd still be interested in it based on the volume drying up, the days getting compressed, their channel being formed, and I don't draw downward and upward sloping lines. I like to draw sideways ones, but you could say this is kind of a flag, right? When things are flagging, it looks like they're about to go up, and that's what we like to see, okay? If we zoom way out, yeah, we know this thing can run, and when things can run, we know volume can come in, and we like that. We like to get in before the volume gets super big so that we participate in that run. Of course, it did follow a little bit of the SPY as well, okay? Which is actually a little unusual for a company smaller like this. Of course, here it didn't follow the SPY at all. It skyrocketed, so I should temper my words. But let's jump into levels first off before we get into what this company does. I think levels are most important. And if you are technically inclined, you see 14.5 is a level. If you have eyes, I don't think it's that crazy to say that 1670 is a level going all the way back to January. And why do we talk about levels? Because if you buy now and it hits that level and it just blows through, well, you can use that level as risk to sort of trail some of your position. Or more responsibly, you can just trail with one of these moving averages, meaning the moving averages are going to go up, right? Because they're the average of the price over time. And so if it goes back down below one of these, then you can sell at that point. And when I say one of these, I mean this one's a pretty good one, the 20-day moving average. So right now, it's at a good spot where you can buy some stock, risk 50 cents, $14 and make, a few dollars, if not more. Of course, if we get up to where there's very little resistance up here, this is volume over time. It could go much higher than $20 and above. So now let's back up a little and say, hey, what the heck is this company doing? Well, they have a collaboration with Samsung, and I do want to jump into why Samsung's still relevant. Well, Apple uses Samsung's displays, memory chips, and camera modules in its iPhones. Okay, Sony, which is relevant to a lesser extent than Apple, but still huge, uses very similar components from Samsung. Dell, same thing. Verizon and AT&T uses handsets, network equipment. Makes a little more sense for those companies. And Meta actually uses their chips and displays in its VR headsets. So that's a pretty big vote of confidence considering how forward-thinking Meta is. Amazon as well. Qualcomm actually uses them for semiconductor manufacturing. Tesla uses their AI chips. This is a Chinese company, but that makes sense that they source all this from Samsung, given that Samsung is not a publicly traded ticker. Okay, these are the symbols that we don't concern ourselves with because we're focused on NASDAQ and NYSE right now, although there's probably some opportunities on other stock exchanges, particularly ones that are pretty high volume that you can participate in. Now, let's take a look at exactly the comparison that's often made between Samsung and its major competitor, which is Big Bear AI. I do think that there are a lot of details we can go into Samsung using Perplexity, and Perplexity being obviously a juggernaut coming out of almost nowhere. But this isn't about Anthropic, Perplexity, ChatGPT. This is a video about what stocks you can actually buy right now and about what SoundHound does. Okay. They have a chat AI assistant. They have voice AI technology. There's a company called 11 Labs, which is not publicly traded, but has probably the most advanced technology that you can use as a consumer. You can go try it out. I think it's one of the only companies with a moat compared to ChatGPT that's a consumer-facing, has a big consumer user base, and has a ton of revenue. I think hundreds of millions at least, the low to mid hundreds of millions. So there's a lot of room for growth for SoundHound. Okay, now with that said, yes, they have 40 million revenue. It's up 200% year over year, and the comparison that's often made is with Big Bear AI, which had a little less revenue. It's actually a drop, and the concern is that Big Bear AI has a better long-term sort of connection to stable revenue, and that's because they are using government as their basically main customer, and they're most often compared with Palantir. Meanwhile, SoundHound basically works in more of these customer-facing sectors. We know White Castle, we know Chipotle. They all need to use AI to more efficiently serve their customers, literally serve their customers. And if we look at Big Bear AI, follows a very similar trajectory to SoundHound, right? The chart looks similar. But right now, this little euphoric rise makes BBAI a little less interesting risk-reward-wise. And when I'm talking about these stocks charts, I'm not talking about, hey, throw some money in here and check it in like a couple months. I'm talking about hey, you're the kind of person who wants to check this maybe at the end of the week, maybe in a couple days. Even better, you check it the next day if you can. And for that reason, I try to give you ideas that are the best for that type of behavior. Which I think most people, even if you're super busy, super busy job during the day, you can hop in, take a position around 1450, check it tomorrow. And I mean, these are entire days. So the entire price, this is one of the biggest moves. And it went, it went down 5%. So if you're okay with a 5% swing while you're working, that's the kind of position you want to take, position size you want to take. And the reason you're okay with that is because moves like this can happen where you get 20% or more conservatively, 10% in a day. And that's just one day. The whole point of this is you get in at a favorable spot and then you look to get a couple 5 to 10% days in a row and you sort of trail with the moving average. So you're up. And if it comes down, you can sell and still make a little bit of money. Because sometimes what happens is you get in, it goes up and up, and it just doesn't come down for a while. So you don't get spooked here because this is when you sell. It didn't hit that line. You don't sell here. So you're getting a lot more bang for your buck and not worrying about little down moves. And you don't have to look at your phone really for about a month. I mean, you do because you just make sure it doesn't touch the line. But when it's super far from the line, you don't have to worry about it. And I'm not trying to be super dumbing down what these lines are. They're super easy. It's just a moving average. You can find it on Robinhood. They do moving averages. I think they actually give moving averages as a default. Like you don't even have to turn them on. I happen to use this Schwab broker software called Thinkorswim, previously from TD Ameritrade. But Robinhood's cool, Webull's cool. The stocks are doing the same thing on all of the softwares. So that's SoundHound. That's the publicly traded way to invest in AI right now, specifically AI voice. And it's the best one to buy right now, which is why we're talking about it. And that's over BBAI, in my humble opinion. If you like these breakdowns, if you want to chat about stocks, your portfolio, sort of what I'm talking about when I'm talking about moving averages, head over to stockscommunity.com. That link's in the description. You can try it out for 7 days. Could be worth it. If you like these videos, hit that subscribe button. And if you want to get any feedback on stockscommunity.com, I will be posting some comments, and those are about ideas I've given, and those will show up in the post section on YouTube. So I will be seeing you one way or the other in the near future. Remember to hit that subscribe button if you are not subscribed to be notified on future videos.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
boring, right? You want to watch some information.
Got it on the chart here for you. And if you join me on this live training, you will see and you'll be like, oh, I now really understand why Felix looked at this one, because this is textbook. This is like a really, really textbook. So if you break out of these highs, you just go a little bit higher, and then we have our sweet spot. Okay, so come and join the live training. We really explain that to you in proper detail. But Envista is essentially a gold mine too. It is a dental gold mine. What do? They make dental equipment, and they make supplies for 90% of clinics, not just in the US, not just in North America, in the world, use these guys. So I like to think of them as the, remember when Intel Inside was on every computer, on every laptop? These guys are the Intel Inside of dentistry. Their products are everywhere. Now, you probably don't know the brands. There's things like Noble Biocare, Dental Implants, 30 plus other dental brands. 85%, and this is insane. Write this down. 85% of revenue, this is what makes a good business. 85% of revenue comes from consumables. Think about it this way. A product is like a gun. You have a gun. You buy one, you have the gun for life. Then you got to buy ammunition. That's the consumable. Every time you fire at something, clay pigeon or something, you got to buy new ammo, right? That's the money machine, because you can only sell so many guns, but you can sell a lot of ammo. So that's the recurring income. And if you look at the last earnings, well, 136% increase in profits over the year. Beat market expectation by 13%. This is in Trade Vision here, right? Where you get good data from. They've raised their guidance.
Whoa.
Management is confident. And, well, again, baby boomers, they're keeping their teeth longer. They need more dental work. Dental implants are becoming common. They have an Invisalign competitor. You might have seen those, right? It's called Spark Clear Aligner. They have AI-driven diagnostics and make dental care more precise. But it's really about that aging population, because older people need more dental procedures. Now, what's our sector number 3? This is the real AI play. It's the lowest risk AI play I can think of. And again, I'm not telling you to buy it. I'm not saying there's no risk. There's risk in everything. But if you understand this, you're ahead of 99% of people. AI data centers use 10 times more electricity than normal data centers, who also already used quite a lot of electricity. So we're going to get, if you look at the pie of, who uses all the electricity in the US? Well, it's obviously households, factories, and so on. But we have this massive slice coming in here. Some people are saying it's 12%. Some people are saying it's going to be up to 50% of all energy, of all power, will be used by these data centers. But even if it's just the 12%, that's the equivalent of adding the state of California to the United States in terms of power consumption. And I think California has probably used quite a lot of power, right? So that gives you a bit of perspective. So therefore, it is like the California gold rush. Everybody needs electricity, which is the picks and the shovels. So nuclear power is making a comeback because AI needs 24/7 power. Yes, you can put a windmill out there. I'm going to try and draw a windmill, and that'll be very nice and all of that. And you can put your solar things onto your roofs, and that'll also be very nice. But the trouble is when there is no sun, or there is no wind, or actually if there's too much wind, these things don't operate. I'm not against them. I'm just saying they don't work. If you have a data center and you're Amazon, you're just like, I need 24/7 power, the same amount of power every hour of the day. So what are you going to do? Well, you're going to go to these charming little fellas. Remember those? Your nuclear power plant friends, which have been now made green. Yes, apparently. You see, Bill Gates did a decade-long campaign to make these guys carbon neutral. That's what the whole carbon thing was about, by the way. It was never about raising oceans or any of that, rising oceans. It was just about making nuclear clean again, right? So that's a good thing. But there is another option, and that is natural gas. Now notice how they put natural in it, because that makes it sound cleaner. And that's a good alternative. Now, I also think nuclear and uranium and all is a good alternative, but this stock is not one of those. So the stock that we're looking at here is called Talon. Talon Energy.
All right, guys. Bill Gates, renewable energy. Market's about to open. Check out those new videos on a Amazon partner stock that's very inexpensive. There's also, I think, a pretty good opportunity on a company that I personally think Microsoft having 50% of its revenue is partially of concern in the future, but right now we're momentum investors. It's a good vote of confidence. And finally, a ChatGPT Sympathy, publicly traded way to invest in a ChatGPT-like company. So check those out. Check out stockscommunity.com. You can join for $25. I think it's a pretty good deal for a limited time. And I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.